2023 is among us. Woohoo! And you know what that means. The Internal Revenue Service has released new limits for the upcoming year. After a year of high inflation and financial uncertainty, some of these cost of living based adjustments are near record levels.
Individual retirement accounts.
IRA contribution limits are up $500 in 2023 for a max of $6,500. The catch-up contribution for people 50 and older remains at $1,000, so their max contribution limit for an IRA would be $7,500.
Roth IRAs.
The income phase-out range for Roth IRA contributions increases to $138,000 to $153,000 for single filers and head of household. That's a $9,000 increase. For married couples filing jointly, phase-out will be between $218,000 to $228,000. That is an increase of $14,000. Married individuals filing separately will see their phase-out range remain at $0 to $10,000.
Workplace retirement accounts.
Those with 401k, 403b, 457 plans, or similar accounts will see their contribution limits rise $2,000 in 2023 to a new limit of $22,500. Those 50 and older using their catch-up contributions will now be able to put in an extra $7,500 for a new limit of $30,000.
Simple accounts.
A $1,500 increase in limits for 2023 gives individuals contributing to this incentive match plan a $15,500 stop sign. The catch-up contribution for a simple IRA is $3,500 for those that are 50 and older, bringing their maximum contribution up to $19,000.
Changes to other deductions.
In addition to changes to contribution limits, the IRS also announced several other changes for 2023, including an increase to the annual exclusion for gifts to $17,000 per person and an increase to the estate tax exclusion threshold. For health savings accounts, or HSAs, contribution limits for single coverage, high deductible health insurance plans rose to $3,850. For family coverage plans, it rose to $7,750. The change between 2022 to 2023 is $200 for single coverage and $450 for family coverage plans. Catch-up contributions for HSAs are for those that are 55 and older. They're also an extra $1,000. So the maximum contribution limits for a self-only coverage plan would be $4,850, and for a family plan, $8,750. Contribution limits can be very hard to keep track of because they generally change every year, but you don't have to go it alone. Please, if you have any question, please contact us by phone, email, or one of our social media pages. Please note, distributions from traditional IRAs and employer-sponsored retirement plans are taxed as ordinary income and, if taken prior to the age of 59 and a half, may be subject to an additional 10% IRS tax penalty. A Roth IRA offers tax-free withdrawals on taxable contributions. To qualify for the tax-free and penalty-free withdrawal of earnings, a Roth IRA must be in place for at least 5 tax years, and the distribution must take place after age 59 and a half or due to death, disability, or a first-time home purchase, up to a $10,000 lifetime maximum. Depending on state law, Roth IRA distributions may be subject to state taxes. Also, please hit that subscribe button to keep up with new videos on a myriad of financial topics. This has been Kyle Skyba with JCB Wealth Management.